This has been a significant benefit for anybody who's kind of holding and managing federal student loans. But it also does make it confusing. And we kind of got an early glimpse of that as the administration said, well, this is the final extension. This is the final extension. The last couple of months, people have really been stressing out and wondering how to prepare for repayment. And now, we kind of, had that as something we were potentially going to have to start. And now we've just kind of paused it for a little bit again.
That is student debt expert and VIN Foundation board member, Dr. Tony Bartels. And this is the VIN Foundation's Veterinary Pulse podcast special student debt series. I'm Jordan benShea, Executive Director of the VIN Foundation. Join me and our co-host and VIN Foundation board member, Dr. Matt Holland, as we talk with veterinary colleagues about critical topics and share stories that connect us as humans, as animals, as a veterinary community. This podcast is made possible by individuals like you who donate to the VIN Foundation. Thank you. Please check the episode notes for bios, links, and information mentioned. Welcome, everyone. We are back here again with our VIN Foundation board member and student debt expert, Dr. Tony Bartels, to talk about the latest news in student loans. And, we had a podcast episode ready to record for today, didn't we, Tony?
We did. Yeah, we had to switch gears again relatively quickly. So
we had to switch gears relatively quickly because about an hour ago, news broke that President Biden has extended the COVID-19 emergency relief for federal student loans, making the new repayment restart date of May 1st. So, we're kind of pivoting as people are regularly doing now with COVID. And now we're kind of back to, oh my gosh, what does this mean? And does May 1st even really mean May 1st at this point? Because we're always asking ourselves that. And Tony, let's dive right in and help us make some sense of this. What do you think?
Yeah, well, I think it just supports the moniker that you should never mark anything as final, because I remember, reviewing the prior statements on this pandemic forbearance, and over and over again, they said this was the final extension. And today it turns out it was not the final extension. So, so we have another 90 days. So this is the pandemic forbearance benefits for federally held student loans have been extended from February 1st, 2022 to now May 1st, 2022. So that means that no payment will be due, no interest will accrue. And if you're working towards any kind of federal student loan forgiveness, that time will also count towards forgiveness as well. So this, again, is this has been a significant benefit for anybody who's kind of holding and managing federal student loans. But it also does make it confusing. And we kind of got an early glimpse of that as the administration said, well, this is the final extension. This is the final extension. And the last couple of months, people have really been stressing out and wondering how to prepare for repayment. And now, we kind of, had that as something we were potentially going to have to start. And now we've just kind of paused it for a little bit again. So,
right.
Yes, so some of the same things apply. We definitely want people to pay attention, right? So, and the way that you can stay plugged into all this is to make sure that your contact information with your loan servicer and with the Department of Education is up to date, right? And that's your email address, your current mailing address, right? Because they're going to be sending you email notifications and post mail notifications to tell you a lot of this information. And just in some of the conversations we've had to people close with us, a lot of people, still have their school email listed with their loan servicer or with the Department of Education, and they don't necessarily check that one anymore. So,
exactly.
Right. They don't get this information, right? So, basic steps, right? Just making sure that you know who your student loan servicer is, which can be challenging because there's a lot of loan servicer shakeups that are still going on concurrently here, right? So, making sure your contact information is up to date with your loan servicer, as well as on the studentaid.gov portal, where you can update that profile information as well.
Yeah, and that's we have heard that a lot recently, and we just actually were told by a fellow colleague the other day, oh no, I created a fake email or an email just for internet stuff, so I didn't have to pay attention to any of that stuff. Well, this is the stuff you're going to want to have to pay attention to.
Yeah, absolutely. So yeah, make sure, first baby steps here, right? So log in to your loan servicer account, log into studentaid.gov, and make sure your current email, the one that you're actively checking, is the active email in those profiles, as well as your current mailing address. You're gonna want to be able to receive all of the information that's being sent out regarding student loans.
Right, right. Another thing we're getting questions about a lot is, what about the auto pay information? Is that something that, that's sort of far from people's minds now, right? Is
Mhm.
that sort of a set it and forget it auto payments for their student loans? What should they do about that?
Yeah, so auto payment is another one of those benefits that come with your federal student loan. So particularly direct loans. If you enroll in the auto pay feature, meaning that you add your bank account to your loan servicer account, so they can automatically deduct the minimum payment that's due when it's due each month, you'll receive a 0.25% interest rate reduction across all of your direct loans for using that auto pay feature. When the pandemic forbearance went into effect, they turned all of those auto pays off, right? And they can't turn them back on. You have to opt into those, right? So you have to acknowledge that, yes, you want to opt back into the auto pay, um, and make sure that your bank account information is the current bank account information to use to
Hmm.
have that monthly payment automatically deducted. So, making sure that you log into your loan servicer, uh, renewing that auto pay or opting back in, or if you've never used it before, you want to add that information so you're receiving that auto pay benefit once repayment does start. And
Hmm.
this would apply to anybody who has a $0 payment on their student loans, right? So you can have scenarios if you, particularly if you follow the VIN Foundation New Grad Playbook for those of you that have graduated into this pandemic forbearance, for example, in 2020 or 2021. We encourage people to graduate, consolidate, and apply for an income driven repayment plan. And in most cases, if you do that, you'll have a $0 payment on your student loans, which doesn't look like a payment, right? But you can still get the auto pay benefit once the pandemic forbearance period ends if you enroll in the auto pay feature or renew that bank account information with your loan servicer.
Right. And that, we're hearing from so many people. I mean, the auto pay is just one example of that. They have just really not been thinking about, student loans. And restarting the repayment on Feb 1st, we started to hear, as you mentioned in the beginning, a little bit of panic coming through, right? From
Yeah,
some
sure.
borrowers.
Mhm.
And we were starting to see emails going out, of things to do, and people started to get a little bit sweaty and a little bit uncomfortable trying to figure out how to deal with this. And now that we've got, an extended 90 days from Fed 1st, which gives us, 4+ months from this time frame, there really is the opportunity to make smart choices and to set yourself up for success. And one thing that's going to be happening during this new extension time frame is taxes are due. So what should be people thinking about as they're, getting ready to submit their 2021 tax return?
Yeah, so this is normal end of year tax time, right? So we do want to start thinking about any of those items or any of those financial moves that we can
Hmm.
make before the end of the year that will impact our 2021 tax returns. And in a lot of cases, for those of us with federal student loans that are using an income-driven repayment plan, those same kinds of impacts to your tax return will also impact what your future monthly student loan payment will be, right? So we want to start thinking about, what do I think um, my adjusted gross income is going to be for the 2021 tax year, right? So how
Mm-hmm.
much money did I earn, and what kind of benefits did I take advantage of during the course of the tax year that might reduce my gross income, yielding that adjusted gross income, right? So contributions to 401ks or traditional IRAs, health insurance premiums, health savings accounts, or flexible spending account contributions. All of those sorts of things will be subtracted from your gross income and end up with the adjusted gross income, which determines how much you pay in federal income taxes. But it is also a metric you can use to renew your income documentation for your income driven repayment plans when you are in fact due to renew, which again
Mm-hmm.
is going to get pushed into the future, right? So
Right.
when the pandemic forbearance, and not to switch gears here too much, but when the pandemic forbearance was scheduled to end on this February 1st, we were told that nobody was going to have to renew their income documentation before August of 2020 at the earliest, right? So you can imagine that maybe that date is probably going to get pushed into the future as
Do
well,
you
right?
mean
So
August 2022?
2022, yes. Yeah,
Yeah.
sorry.
Okay.
So
There.
August
All good.
2022.
Yeah.
Yeah.
Yeah. Yeah. Okay.
Yeah.
Okay. So there's a possibility that that might get pushed, but even if it gets pushed anytime later in 2022, that's still going to be based on the AGI that you report in 2021.
Correct. You'll have
Yeah.
that option of using
Mm-hmm.
your adjusted gross income from that most recent tax return, which at this point is going to be your 2021 tax return.
Mm-hmm. Right. Okay. And, this part is not surprising, but we hear this a lot in the different webinars that we do, and we've done quite a few in the last few weeks. So there are some people who have made payments to their loans during this time, even though they don't need to. And if they don't know that there's a refund option. So there is a refund option, correct?
Yes, that's correct. As part of the pandemic forbearance benefits, right? So if you've made a payment towards your federal student loans anytime between March 13th, 2020, when the pandemic forbearance period started, through the end of the pandemic forbearance period, whenever that's going to be, you
Mm-hmm.
can request a refund of those payments. Um, and in many cases, it makes a lot of financial sense to do so, right?
Right.
Particularly if you're projected to hit student loan forgiveness, right? So that's where I would really encourage people to make use of this, again, bonus time that you have where you don't have any payments due on your student loans, you don't have any interest accruing, right? Researching your short and long term repayment options, right? So you should have a pretty good handle on what your income is, even if you graduated this past May in 2021 from veterinary school. You should have a pretty good idea of what your income and earning potential is for this year and the coming year, right? So you can start to use those things in your student loan repayment projections using the VIN Foundation Student Loan Repayment Simulator. And if you are projected to reach forgiveness, then it doesn't make any sense to make any payments during this pandemic forbearance period. Right. Your best move is to pay the minimum that your income requires and to plan for the forgiveness.
Right. And there are ways during this time, as hopefully borrowers have been doing so far, to really improve your financial wellness, right?
Exactly, right? So instead of making payments towards those student loans, you should be looking for opportunities to maximize your retirement savings. Make
Mm-hmm.
sure you have a robust emergency fund, right? So you're looking for at least 6 months of expenses to have on hand in a dedicated emergency account. Making sure again, if you work for an employer who is offering you something like a 401k and they provide a matching incentive, you want to at least contribute the amount that you need to require the maximum match from your employer. But even
Mm-hmm.
beyond that, right? I try to get people to contribute at least 10% of their gross income into some kind of tax advantaged retirement account. But challenge yourself to hit the IRS maximum contribution limits, right? So for example,
Mm-hmm.
a 401k has a maximum contribution limit of 19,500 for the 2021 tax year. See if you can hit that limit, right? I mean, you don't have to make a student loan payment, use that
Right.
money
Right.
wisely. And if you do that, that'll also reduce your adjusted gross income in a lot of cases, which means your student loan payment will be lower when you do use that adjusted gross income to document your income for an income driven repayment plan.
And we will, some of the things that Tony's mentioned here and I've mentioned, as always, the links will be in the episode notes. Um, What else do you feel like people should know, or is there any other vital information that you feel like we need to share at this time?
Yeah, so the overlap, and this is a common question that we get a lot, even outside of the pandemic forbearance, is how you should file your taxes, particularly if you're married, right?
Hmm.
And again, just with the timing of all this, you've got some now extra time to work through that exercise. So if you're recently married in 2021, or maybe you were married already, you've got federal student loans, and you're kind of wondering, should I file my taxes jointly or separately from my spouse? How is that going to benefit my student loan repayment strategy? How might it impact my taxes that I pay? This is an outstanding time to start working through that, right? So, in many cases, we see that it can be extremely financially beneficial for married households. If just one of you, the veterinarian, has the student debt, to probably file your taxes separately from your spouse, right? But that's going to incur some tax penalties, if you will, or you're going to lose access to certain tax benefits and maybe even end up paying more in federal income taxes. However, you could end up saving a significant amount in student loan payments whenever we're due to start student loan payments again, right? So just considering what that might look like for you, and because nobody's going to have a payment that's due until at least almost midway through the 2022 year, right?
Hmm.
It may be that you don't have to file separately this year because you're already getting a benefit on your student loans through the pandemic forbearance for the next half of 2022,
Right.
right? So, but you want to get those wheels turning. You want to start doing
Hmm.
that cost benefit analysis because it may make sense for you to file your taxes separately in the 2022 tax year, right? So
Hmm.
it's just about understanding, am I using the right repayment plan that allows me to separate my income from my spouse if I file my tax return separately, right? So a plan like IBR or pay as you earn allows you to do those things. If you're
Hmm.
using repay, even if you file your taxes separately, you can't separate your income from your spouse, right? So taking stock of the repayment plan that you're actually currently using, and if that will allow you to have that flexibility of reducing your payment if you choose to file your taxes separately from your spouse.
Yeah, this is really a great opportunity, as it has been since March 2020, to do some housekeeping, right? To take care of the things that, otherwise things seem so pressed and so pushed to figure out and decide. Borrowers are given a lot of opportunity here to spend the time on the financial wellness, think about the best tax situation, run simulations on the VIN Foundation student loan simulator, which of course we'll put a link to as well. And look at what the best repayment plan is. This is, or, even public service loan forgiveness, doing some of the housekeeping there to make sure that things are lined up for you. These are really great opportunities to take advantage of.
Right. And in those running those simulations, if you discover that you're constantly seeing an amount forgiven, right? Make sure you're looking at that forgiveness planning module, and how much should
Hmm.
I start saving towards my forgiveness, or how much should I
Right.
start boosting my forgiveness savings plan, right? Again, with no student loan payment due, this is an outstanding time to really kind of work on that forgiveness savings plan, right? I hope that nobody has to actually use it, right?
Hmm.
But you
Hmm.
want to have some kind of forgiveness savings on hand in the event that we reach student loan forgiveness and that incurs a tax liability, right?
Right.
So the sooner you can start saving for that, the longer time you give yourself to save for that, the easier it's going to be to reach that target, and the easier it's going to be to adjust if need be, if you need more, or maybe less or none at all, when
Hmm.
and if we reach student loan forgiveness.
Right. And, as always, you can stay up to date on the VIN Foundation website. We'll put a link there to stay up to date with information and news. And we can help by sending out news alerts and on this podcast, checking for new episodes, as well as on social. Any other suggestions that you have, Tony?
While this is going on, so the one thing that I do, I'm encouraged by this decision to extend the pandemic forbearance, particularly while the loan servicer shakeup is happening,
Hmm.
right? So
Hmm.
and I wonder if this also didn't have something to do with it, in addition to, the new COVID variant that we're all kind of monitoring and dealing with. But
Hmm.
um, Fed Loan Servicing, again, has announced that they are quitting. So they're in the process of moving loans from Fed Loan to one of the other loan servicers. Navient announced that they are exiting the loan servicer business and they're moving their loans to AidVantage, right? So those of you that have Navient will probably have seen those emails, presuming that your contact information is up to date. But that is actually going on right now, right? Those
Mm-hmm.
loans are being moved, and it was kind of getting close to
Right.
when the repayment was due to restart, and they're still in the process of moving loans, and when loans get moved, mistakes get made, right? Just like
Right.
when you move from one location to another, something always gets lost or damaged in the move, right? For whatever reason, the same thing seems to apply with your student loans when they move it from one servicer to another. So
Mm-hmm.
you really have to pay attention while those loans are getting moved to make sure all of that information is translating over to the new loan servicer correctly, and that you're seeing everything that you expect to see in that new loan servicer account.
Right. And, we also want to say that these podcasts, I know they can seem sort of one way because you can't ask questions, but we are here to answer questions. And there is a huge resource on the student debt folder on VIN that you have access to from VIN Foundation for free. You don't need to be a VIN member. And we'll put that link in the episode notes as well, because any questions that you're having, I assure you others are having them as well. And, we started to see some emails being sent out from Fed Loan Servicing a couple of weeks ago, and I'm sure there'll be more emails coming with now adjusted comments and adjusted suggestions and timeframes. And if you have any questions about those, please share them, because there are lots of other colleagues who are in your situation, and we encourage you to post questions, and Tony can answer, other colleagues can answer, and you even have the option of doing so anonymously. So we really encourage you to reach out. You are not alone in this process. We are here to help you. And yeah, anything else
Yeah,
you're
and that's
welcome.
that's how
Yeah.
we learn a lot of the information that we're
Right.
we're sharing with you, right? So a lot of the questions about some of the snags that have been happening with loans being moved from Fed Loan and Navient, and people trying to make sure that they can document all of their historical progress towards forgiveness, and how to go about that, and where to look for that information. And so we're developing quite a database of information that answers those common questions that are happening while people are working their way through repayment, and also trying to give you all this kind of the best practices to use, so you can avoid some of the common mistakes that we've seen made over the years with student loans and repayment.
Yeah. And really, it's only through colleagues being willing to share their stories that we're able to learn more, and through that be more helpful. So we really encourage you guys to reach out and engage and ask questions. All right. Well, I think that we're going to keep this somewhat short, mostly because we just want to get this out and get everybody the information. Anything else you think we should leave our audience with, Tony?
Yeah, just eyes open, right? Pay attention,
Mm-hmm.
ask questions. This stuff is I guess I wouldn't have anticipated that they were going to extend this one again, and they did,
Right.
right?
Right.
So you never know what can happen. um, you have to keep keep staying plugged in, and keep working on your overall financial wellness, right? Enjoy this student loan payment interest free time frame, and
Mm-hmm.
use that to explore other areas of your financial wellness, which in my opinion are way more important than worrying too much about your student loans.
Right. Yeah. We're here to help, and thank you for being here and listening, and stay tuned, and we'll be back with more news, I'm sure, soon. And check out the episode links, and we hope to see you on the message boards and engaging.
All
Thanks,
right, thank
everyone.
you. Yeah, thank you, Jordan.
Thanks, Tony.
Thank you for joining us for this episode of the Veterinary Pulse. Please check the episode notes for additional information referenced in the podcast. If you enjoyed this podcast, please follow, subscribe, and share review. We welcome feedback and hope you will tune in again. You can find out more about the VIN Foundation through our website, vinfoundation.org, and our social media channels. Thank you for being here. Be well.